What is common stock on the stock exchange? Common stock represents ownership in a company and gives the owner a share of the company's profits and assets. Common stockholders usually have voting rights, which allows them to participate in the company's decision-making process. Common stocks are bought and sold on the stock exchange, making it easier for investors to trade. Features of common stock. Equal rights. Common stockholders have the right to share equally in the company's profits and assets. Voting rights. Common stockholders generally have the right to vote on matters such as the election of directors and mergers. Stock exchange trading. Common stocks are traded on the stock exchange, providing liquidity and price transparency. Risk and return. Common stocks offer investors the potential for both risk and reward. The value of a stock can increase when the company is performing well, but it can also decrease if the company is struggling. Investing in common stocks. Investing in common stocks should be considered a long-term investment strategy. Investors should carefully analyze a company's financials, profitability, and growth potential before purchasing stock. It's also important to diversify your portfolio to reduce risk. Common stock versus preferred stock. The key differences between common stock and preferred stock include dividends. Preferred stockholders typically receive higher dividends than common stockholders. Liquidation preference. Preferred stockholders have a higher claim to the asset than common stockholders in the event of bankruptcy. Voting rights. Preferred stockholders typically have less voting power than common stockholders. Additional topics. Types of common stock. Registered common stock. This type of stock is registered in the name of the owner and is usually held by the company. Holder stock. This type of stock is not registered in the name of the owner and is easily transferable. Common stock issuance process. Companies can issue common stock through a process called an initial public offering, IPO, or through secondary offerings. Common stock valuation. The value of a common stock is affected by many factors, including the company's performance, market conditions, and the overall economy. Common stock returns. Common stockholders can earn returns through dividends and capital appreciation. Common stock risks. Investing in common stock involves risks such as market volatility, company-specific risks, and economic downturns. Common stock taxation. Profits from the sale of common stock are subject to capital gains taxes. Things to consider. When investing in common stock, investors should carefully research a company before investing in its stock. Investors should diversify their portfolios to reduce risk. Investors should have a long-term investment horizon. Common stock-related organizations. The Securities and Exchange Commission, SEC, is the primary regulator of the stock market in the United States. The New York Stock Exchange, NYSE, and NASDAQ are the two largest exchanges in the United States. Bottom line, common stock is an important investment vehicle for many investors. However, it is important to do your research and understand the risk before investing. Warning: investing in the stock market is risky. Be sure to do your own research and consult with a financial advisor before investing. This information is not intended as investment advice. The author and publisher are not responsible for any losses incurred.